Good morning and welcome to IGTV. I am Angeline Ong, and it's a brand new week with tons of things happening, especially out of China and also on the growth front. Let's get you across the headlines first. Nikkei's 225 at an 18-month high, boosted by earnings and also a weaker yen. Traders, of course, cautious ahead of those Chinese data points, which I'll get you across in a moment. Of course, that US debt ceiling conundrum. We've also got the US earnings season, although that's coming down to a trickle now. It's a big week for retailers. And oil prices, well, the weakness there persists. WTI is back below that $70 a barrel level. Let's turn quickly to the VIX now. And the VIX, this is, of course, the estimate of the 30-day expected volatility of the benchmark S&P 500. Based on option prices on the index. This is quite an interesting one because, as you can see here, it has moved down quite significantly from this level here since that banking crisis that unfolded back in March, and has continued to go down to the 2032 level. Now, the volatility index, or the VIX, is often seen or called the so-called fear gauge, but many experts out there have said that other indicators and indices should be taken into account as well to get a more complete picture of risk. Now, with 30 minutes to go until the European Open, let's have a look at what that looks like. Here's the FTSE for you. The FTSE looking like pretty much a flat or slightly higher open now. It's traded slightly higher in the last few minutes or so. Let's take a look at the DAX as well for you, or name the Germany 40 on the IG platform. A similar picture there, as you can see. It is heading slightly higher now ahead of the open. And the French CAC 40, which is known as the France 40, let me get that up for you here, is looking potentially similar to that as well. Yes, as you can see there, slightly higher than about 10 minutes ago. So we could see a slightly higher open when European trading gets started. Now, overnight in Asia, it was a similarly interesting day. All up arrows there. Not a huge amount of conviction though, because as I mentioned earlier, there are those retail sales numbers from China, along with other growth data from around the world, including the Eurozone and the US as well. And of course, that debt ceiling talks that will be taking place this week between Janet Yellen and Wall Street's biggest banks. The Nikkei 225 trading at an 18-month high, though, thanks to those positive earnings reports and a weaker yen as well. In Australia, gold miner Newcrest Mining says it will back Newmont's takeover offer. Now, if approved by shareholders, the $17.8 billion deal would make Newmont the largest gold and copper producer in the US. Friday was a negative session in the United States, which meant that the Dow Jones and the S&P 500 recorded a second straight week of losses. As I mentioned earlier, a whole host of data points out of the US and China this week, keeping investors treading water, if you like, and waiting on the benches until they get further knowledge and a further idea of what lies ahead. Fed officials are set to speak this week to vindicate market pricing of rate cuts this year. And also, of course, we've got those talks surrounding the debt ceiling. Let's take a look at the pre-market ahead of the Wall Street Open. There you go. This is the picture there. Pretty much flat to slightly higher. Investors also watching out for the May data for the Empire State Index, which will show how New York State manufacturers felt about the economy. Now, very little else on the macroeconomic front today. Earlier this morning in Japan, producer price index, well, that rose by 5.8% in April year on year, slowing for a fourth straight month. This is an indication that consumer inflation should start to ease in the coming months. In March, that index rose 7.4%. And later in the morning, industrial production in the Eurozone is forecast to fall 1.8% in March, month on month. This is after a 1.5% increase the previous month. Now, more to come this week. On Tuesday, the market is expecting to find out more about the RBA's unexpected decision to raise rates at its last meeting. Now, this was a shock. Most market watchers expected a pause still. After an 11th rate hike in the last 12 months, the main rate now stands at 3.85%, as the Australian Central Bank is concerned that current inflation in Australia is still too high. Also on Tuesday, the focus, as I mentioned, will be on China's retail sales for the month of March, Eurozone GDP growth rates, and Germany's ZEW economic sentiment will also be in focus. Economists anticipate a third straight month of decline of the ZEW indicator to negative 5.5 from 4.1% the previous month. This would take it to its lowest level this year. And later on in the week, the first estimate of Japan's GDP for Q1 is expected on Friday. Look out for the GfK consumer confidence number out of the United Kingdom. Now, to corporate news, as I mentioned, it's calming slightly, but there are still a few notable companies reporting. Look out for Currys, of course, the group unveiling this morning a 7% drop in like-for-like sales for the full year, but has revised upwards its full-year earnings expectations between 110 to 120 million pounds. Currys previously forecast 104 million in terms of earnings. That's in sterling, of course. Now, more to come in terms of earnings reports in the UK throughout the week. On Tuesday, we're looking out for first half earnings from Imperial brands, Vodafone's full year, and a trading statement from Greggs. And on the menu on Thursday, easyJet, BT Group, Burberry, and International Distribution Services, otherwise known as the Old Royal Mail Group. In the United States, the earnings season is almost over, but we do have a few big names expected to report still. Starting on Tuesday, we've got Home Depot, followed by Cisco and Target on Wednesday. And on Thursday, look out for Walmart and Applied Materials as well. Home Depot, Target, and Walmart are some of the biggest names in US retail. As you know, they're reporting earnings in a very challenging period of still very high inflation and quite shaky consumption. On the one hand, retailers are trying to pass on higher costs to their consumers and customers. And on the other hand, shoppers are looking for ways to limit spending. Walmart's earnings expectations will paint a picture of how tricky the situation is for retailers that are trying to balance the two. Revenue is anticipated to rise 5% to $148.5 billion, reflecting that rise in cost. But the street expects earnings at $1.3 or $1.30 per share, which means a fall in profit margins. To oil now, and prices are trading lower this morning. Last week was a fourth straight week of declines for WTI and Brent as well. On Friday, we have the Baker Hughes total rig count, which fell by 17 to 731. This is mainly due to a decline in working gas rigs. The number of oil rigs in operation fell by only 2 to 586. And just showing you the price of oil there, because I believe the chart, we had a technical glitch. Here you go. That's the US crude price there. And as you can see, at the moment, it's still early in the European session, but it's down around 0.33% at around 6,983. And that's it for now. Before I go, let me just remind you, we have charting as per usual at 10:30 with Axel Rudolph, who's back with us at IG after a very nice holiday. And we'll also have the look ahead with me later on today on the platform. Until then, I'm Angeline Ong for IGTV.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.